Hello and welcome to Startup Street. I'm Shruti Mishra. These are the top headlines from the startup space. Axel Bagged Inframarket has filed for an IPO worth 5,000 crore rupees through the confidential filing route. The issue is expected to be split evenly between fresh equity and an offer for sale by existing investors. Grow XCD Finance, a startup lender to small businesses, has raised 200 crore rupees from Blue Earth Capital and Process Ventures. Blue Earth Capital led the round with 105 crore rupees, while Process invested 70 crore rupees. This funding will support the next 12 to 18 months of business. Mishmash Naturals, an Ayurvedic beauty and self-care brand focused on children aged 3 to 14, has raised 2.4 crore rupees in a pre-seed funding round led by Inflection Point Ventures, IIT Delhi Angels Network and others. The funding will be used to expand their portfolio, invest in R&D and venture into UAE and other GCC markets. A federal judge has denied Apple, Google and Meta Platforms' requests to dismiss lawsuits claiming they promoted illegal gambling by hosting and accepting commissions from casino-style apps that addict users. Dozens of plaintiffs contended that Apple's App Store, Google's Play Store and Meta's Facebook promoted an authentic Vegas-style experience of slot machine gambling through an illegal racketeering conspiracy. Spotify founder CEO Daniel Ek will step down to become executive chairman in January, the Swedish streaming company said, as it adopts a new co-CEO structure in its strategy to fend off rivals and shore up its profit margin. Ek will focus on capital allocation and long-term strategy as executive chairman in what the company called a European-style role. Well, those were the headlines we've been tracking for you this evening on What's Brewing Today. Global SaaS company Wingify, the maker of its flagship experimentation and personalization platform visual website Optimizer, or VWO, today powers over 3,000 brands across 90 countries, including Disney, Decathlon and UNICEF. Now, with revenues crossing $60 million ARR in 2025 and profitable growth that drew the attention of Everstone Capital, which picked up a majority stake earlier this year for about $200 million, Wingify is now doubling down on global expansion, most recently entering the Middle East and Africa. Joining me now is Sparsh Gupta, the co-founder and CEO of Wingify. Sparsh, welcome to Startup Street. And let's start with VWO. It began as an A/B testing tool, but today powers large-scale experimentation, personalization, and AI-driven insights. Now, with features like, VWO Copilot, how do you see Wingify standing out in an increasingly crowded global SaaS market?
Thanks, Shruti, for having me here. First of all, I think VWO started off as one of the first self-service A/B testing software almost 15 years back. And in this last 15 years, I think what we have really focused on is on our product. And I think to stand out in the SaaS market, our product is going to be the key differentiator. There are two key areas where we are focusing on from a product standpoint. One is the breadth of our capabilities. And I'm very proud to announce that, we are the only A/B testing software, experience management software, which take care of the experience of a user online on websites and mobile apps end to end. And number two is the intelligence. There's a lot of focus on AI, that we are adding up, which means that VWO is no longer going to be just a tool which helps customers meet an end, but is going to deliver the end outcome. I think these are the two differentiations largely. On top of it, our world-class support, which is going to make a difference in the market for us.
All right. Earlier this year, Everstone Capital acquired a majority stake in Wingify for $200 million. Sparsh, how has that partnership reshaped your growth playbook?
First of all, the team that built the Wingify for the last 5-7 years is exactly the team that's going forward. So there's absolutely no change in the team that built Wingify. What we have got is a lot more confidence and a lot more fuel to think bigger and move faster. There's a global expansion. We're just going out, expanding globally. There's a lot of enterprise play that we're building out. And then we also started exploring some inorganic opportunities. So I think largely, while the organic business has been taken care by the same team that built it, there are more avenues of going after enterprises and inorganic. That's really the playbook that we are following right now with Everstone Capital.
All right, Sparsh, like I mentioned earlier, Wingify today is a $60 million ARR company, and you've set your sights now on the $100 million mark. How soon do you expect to get there? And importantly, unlike many SaaS peers chasing top-line growth at any cost, Wingify has remained profitable while scaling. What's been the key to that balance?
While 100 million, we're looking at in next couple of years, we should be there. We are fairly confident about that. I think what gave us the profitability, what we built Wingify on is a lot of discipline. In last 15 years, every single time we took a decision, there was a lot of discipline around it. We built it in a way that it can be a very long-term play. And I think it's the same discipline which gives me confidence now that the investments that we're making right now across the globe in different verticals on product, on GTM, and everything else, I think it's all coming together that the growth is accelerating. The demand of digital experience optimization platforms is also going up quite significantly globally, and I think we're very well positioned, very well fueled, have a very well capable team out there to deliver on this promise. And along with that, there are some inorganic opportunities also that we actively are exploring. And if that happens, I think we're fairly certain that that 100 million next 2 years is fairly achievable for us.
Okay. Picking up from what you said earlier, you've just expanded into the Middle East and Africa. What is the big opportunity you see in these markets, and how do they differ from your more mature bases in the US and Europe?
So, Middle East and Africa is a very exciting market because the digital adoption is just happening at a remarkable pace. Enterprises are leapfrogging and want very modern stacks. And there's hunger to get some world-class experimentation and personalization suite. I think unlike the West that we saw in last 10 years, now they want end-to-end outcome. And I think it's no longer just demand for tools. It's also about that they want the experiences of every single person coming on their website and mobile apps to be highly optimized. And our Copilot, our VWO Copilot, along with the entire tool stack that we have, are very well positioned to deliver to that promise in the Middle East and Africa market.
Okay. Well, on that note, it's time for me to wrap up our conversation. But many thanks, Sparsh, for joining us on Startup Street, and wish you the very best.
Thanks a lot. Thank you, Shruti.
Moving on, in a big boost to India's MSME lending space, Chennai-based GrowXCD Finance has raised about 200 crore rupees, nearly $23 million in fresh funding. The round was led by global investors Blue Earth Capital and Process Ventures, with existing investors backing Low Capital and UC Empower also participating. Founded just 3 years ago, GrowXCD has already built a loan book of over 300 crore rupees and operates 60 branches across southern India. The company says the new capital will help expand its portfolio and deepen access to credit for underserved small businesses. Joining me now to discuss this further is Arjun Muralidharan, founder, MD and CEO of GrowXCD Finance. Arjun, welcome to Startup Street. How does this fundraise position GrowXCD in the highly competitive MSME lending landscape, especially against larger NBFCs and fintech leaders? Arjun, if you could take us through the gap you're trying to address here.
Sure. Thank you so much. First of all, thank you so much for having me here. First, we are talking about a very large MSME gap that is there in India, and the number of players that is required to address it, especially aided with more technology and having a more customer-centric focus. That is really the space that we are trying to address. We are focusing on making sure that we can enable a very customers-focused, technology-first approach towards being able to address this gap that is there. Now, the MSME gap that is there right now is actually quite large in India. And if we are able to bridge this gap, that really enables faster growth and acceleration for all the small businesses, which will also aid in the growth of overall the economy as well. So this is something that we believe very strongly, that I think we have a very good, strong position and be able to also address this gap, which takes us to much more deeper markets as well.
All right. Arjun, what will be the key focus areas for the company as it deploys the fresh 200 crore rupees raised? How do you plan to use the funds?
No, I think first thing will be in terms of branch expansion. So we're currently at about 60 branches. We're planning to increase the number of branches. So it will be branch expansion and deployment of this and leveraging this capital, which will basically be able to access more customers. Currently, we have about 6,000 odd customers, and with this capital, we'll be able to reach a much larger number of customers across much deeper areas and across larger geographies as well. So it'll be branch expansion and also in terms of increasing the loan book through leveraging the capital that we have.
Okay. Arjun, given the company's rapid growth to a loan book of 300 crore rupees in just 2.5 years, what is the roadmap for scaling operations while maintaining asset quality? Also, what role will technology and data-driven lending play in Grow XCD's strategy to bridge the MSME credit gap in India?
Sure. First of all, in terms of our growth plan, we basically are currently at about 300 crores of assets under management right now. By the end of this March, we are looking to get to about 500 crores of assets under management. And by the next year, we are looking to again take that to, we have a 12-month to 18-month roadmap, before which we want to try and take this to about 1,000 crores is the numbers that we are looking to get to. So with that, with expanding to about another 40 or 50 odd branches, which will basically take us to a good number of branches across the southern states. Now, what we will also be doing is, using technology and data and analytics to be able to understand how we can do the same, reach out to the customers, be able to assess the customers in a much more faster and a more efficient manner. At the same time, not losing the focus on making sure that we understand the customer segment, which basically may not have too much data points with them. So we are basically trying to create a model which will be able to use technology at the same time, keep our roots at the feet on the ground, and make sure that we can do the same.
All right. Arjun, with over 60 branches across southern India, what are Grow XCD's immediate expansion plans in terms of geography and customer segments?
So we will be expanding, deepening ourselves within the existing geographies. We are currently present in Tamil Nadu, Karnataka, Andhra Pradesh, Telangana, and also in Pondicherry. So our immediate focus will be in expanding within the existing markets. And in future, probably we'll be also looking at expanding to other states as well.
All right. On that note, it's time for me to wrap up our conversation. Many thanks, Arjun, for joining us on Startup Street, and wish you the very best with your aggressive growth plans.
Thank you. Thank you so much.
With that, it's time for us to head into a short break. But coming up next, jewelry brand Lucira secures $5.5 million in seed funding. And that's not all. It opens its first retail store in Mumbai this month and sets sight on omni-channel expansion. We're joined by co-founder Rupesh Jain to discuss the company's aggressive expansion plan. On the other side, stay tuned. Welcome back to Startup Street. India's fine jewelry market has a new disruptor. Lucira Jewelry, founded by ex-Candia entrepreneur Rupesh Jain, has raised $5.5 million in seed funding, the largest ever for a jewelry startup in the country. The round was led by Bloom Ventures and Spring Marketing Capital, with backing from Series 1 Capital Fund and market D2C founders. Lucira, which launches its first retail store in Mumbai this month, is betting big on sustainable luxury with lab-grown diamonds, recycled gold, and an aggressive omni-channel expansion strategy. Joining me now to discuss this further is Rupesh Jain, the co-founder of Lucira. Rupesh, welcome to Startup Street. Before we get into the fundraise, talk to us about Lucira's plans to differentiate itself from the traditional players and establish digital-first jewelry brands. It's a highly crowded market.
So thank you so much for inviting me. So Lucira differentiates itself very clearly in terms of designs, the affordability part, and the omni-channel piece. We are very clear that we are a digital-first brand where a lot of discovery will happen online, and the customers will then transact either online or offline, whatever is convenient for them. We really stand for lighter ticket value, day-to-day, everyday jewelry, with very different approach in terms of comfort, designs, and different kind of cuts and colors in the entire jewelry. So we want to focus on the modern India, the new Bharat that we are catering to. It's a massive population that we really want to cater. And since gold rates are also going very high, I think the new segment that we are catering is going to really become large for us. So that is how we are differentiating ourselves.
All right. You also, your first retail store is opening in Mumbai this month. What role will physical retail play in your omni-channel growth strategy?
So we are very fortunate that we are on the live show, and our store opening is happening on the same day. So today morning only we had opening of our first store in Bombay, and we have seen very good response from customers. A lot of people liked our collection. They gave us feedback that they have not seen such large collection in any of the other lab-grown diamond jewelry players, and the price points that we are catering to. In terms of our physical strategy, I think physical retail is going to be a big part of our journey in terms of distribution. A lot of discovery will happen online, but a lot of our transactions will keep happening in the offline world, since people would want to try and check the jewelry. So we have big plans for the offline. Yeah.
Rupesh, lab-grown diamonds and recycled gold are central to Lucira's pitch. How are Indian consumers responding to the idea of sustainable luxury?
So I think people are really getting educated a lot in terms of what are they consuming, and in terms of luxury, what are they using. So I think people are really liking the entire sustainable angle. They are understanding that there is no damage that we are creating on this earth, and we are wearing something which is sustainable, which is luxury, and which is really for long term. So I think people are really liking the entire concept.
Rupesh, you claim to have over 1,000 customized designs already. How important is personalization and technology shaping in the next phase of jewelry buying?
I think people now have a very different taste in terms of their day-to-day. Every single customer for us is very differentiated. So they will have their own choice of designs, their colors, their cuts, and they would want to really wear their own personality whenever they are carrying themselves. So I think in terms of designs, we would really want to be the first brand in the mind of the consumers. And in terms of tech, since we really understand the tech part of it, the entire automation part of it, the discovery part of it, the content part of it. So I think the tech and design are really close to our heart. And earlier also we have built something in the past at Candia. So we know that customers really like the tech and the design piece. Yeah.
All right. You've said that Lucira is entering an aggressive growth phase with retail expansion and a design-first portfolio. So, Rupesh, tell us what kind of revenue targets or growth trajectory are you working towards, let's say, over the next 2 to 3 years?
So, I think in next 2-3 years, we are aiming the top line of almost 100 crores. This year, we plan to reach to first 10 crores with 3 to 4 retail stores this financial year, and then from there taking a lot of feedback and then changing our gears to more aggressive strategy. Okay. So that's our plan for online and offline retail. Yeah.
Okay, one final question before I let you go. You've described Lucira as your second innings after building Candia. What lessons, Rupesh, from that journey are you applying here?
So I think top 3 lessons that we have been applying from Candier journey to Lucira is build a world-class team so that they can handle the long-term growth for the company. Second is build good systems so that they can really support and they can ease your work. And the last part is keep focusing on your product so much that your customer really fall in love with your product. So I think these are top 3 mantras for us in Lucira.
All right, with that, it's time for me to wrap up our conversation. Many thanks, Rupesh, for joining us on Startup Street, and wish you the very best.
Thank you so much. Thanks, Shruti.
Well, moving on, WhatsApp is no longer just a messaging app in India. It's powering small businesses, payments and public services. cnbc TV 18's Rachna Dhanrajani reports that Sandhya Devnathan, Meta's head for India, is busy trying to change that. Take a look.
WhatsApp Business has become an integral part of India's digital economy, with about 10 million users in 2022 to 15 million users by 2024 and about 175 million daily interactions. MSMEs are the largest users by far and the fastest growing category, with WhatsApp being used to collect orders, collect payments, connect with customers in faster and a more efficient manner.
I think the journey that we've been on WhatsApp really has been for businesses has been one, finding out what customers and users want in how they talk to business. Just recently, we published some, Kantar, I think, shared these numbers. 91% of, online adults that they surveyed talk to a business on WhatsApp. So it's a pretty, big trend. Whether we are there or not in terms of enabling a structured way to do it, customers and users are talking to businesses.
It's not just businesses. Even governments and institutions have found WhatsApp to be an effective tool in their hunt for efficient information dissemination and even document distribution.
Around 7 million tickets on metros are sold every month. So, in fact, I think we're hitting close to 100 million ticket run rate now annually on metro tickets sold on WhatsApp. And if you remember, this was a small pilot that started in Bangalore 3-4 years ago. So you can already see the scale at which this has happened. And we were so encouraged by that we worked with the Andhra government to launch Manamitra, which is 700 services, citizen services that are available on that chatbot, which you can access, by messaging one phone number on WhatsApp. And what you see there is, the usage has, and, the feedback we've gotten has been so encouraging. There's 4 million people that have already used it. And one of the big use cases we're seeing is education. So during the 12th board exams, 91% of the hall tickets that were given to 12th board students were on WhatsApp. So this is not things that we'd have imagined were possible like 4 years ago, but are happening because Indian businesses, Indian state governments, are all innovating in terms of how they will use WhatsApp. What also excites me is the use of AI on WhatsApp. So I think as chatbots will get more and more powerful with voice, with AI-enabled services, you'll start to see truly that becoming, something where you're not just having a two-way dialogue with text, but you're able to have a conversation and get what you want right on WhatsApp.
How do they drive up revenue in the country for Meta?
So we don't publish, the India breakout numbers, but again, we're very happy to see the kind of growth that we've seen on revenue in India. And I think what makes us happier is that businesses are finding real value, and that's why they're putting their rupees with us. The global number that we've shared is that paid messaging overall on WhatsApp is expected to touch $1 billion run rate this year, and India powers a lot of that number. Is that we've sort of really taken a customer first mindset in terms of what does the consumer want and how will we enable that, and which is why if you see our payments functionality itself on WhatsApp is not just about WhatsApp Pay. You can pay using any UPI provider.
WhatsApp Pay is slowly carving out a place for itself in India's digital payments market. Following the lifting of the 100 million user cap in December 2024, monthly UPI transactions doubled to 61 million by January 2025. However, its share of India's UPI volumes remains under 0.4%, far behind leaders like PhonePe and Google Pay, which together account for over 85% of transactions. But WhatsApp is not giving up. But as businesses scale, they are starting to hit roadblocks. Criticism includes broadcast messaging being capped at 256 contacts per list, limited multi-agent workflows, and weak native automation. People also worry that with cloud storage outside India, the service lacks enterprise-grade audit trails or guaranteed compliance with India's Digital Personal Data Protection Act. For regulated sectors like finance and healthcare, this is a serious limitation. But WhatsApp says these are issues it is working to address on a war footing. Experts say it will have to work quickly given the rising threat from rivals like Telegram and Gupshup and even the newly launched Zoho Aratai. In Mumbai, I'm Rachna Dhanrajani.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side.